it's time for some stock picks for you to consider for your portfolio. For that, Eddy Gifford's with us, CFP Wealth Advisor at Tactive. Thanks for being with us. So where do you think, we want to get into your head a little bit about where you think the market is headed between now and the end of the year, because that would explain some of your picks too.
Yeah, absolutely. I think that right now what we see is it's funny, right? Because one day everyone's happy, then the next day everyone's scared, and then the next day everyone's happy, and then the next day everyone's scared. And so it's like, how do you pick something when one day you're like, yes, everything's going to be great, and then the next day you're like, oh my gosh, the world's going to end. And I think that's kind of a challenge that a lot of investors are struggling with right now as we see October unfolding. And unfortunately, October isn't really a good month in election years, generally speaking. A lot of that just has to do with volatility around the uncertainty related to who's going to be president, what's going to happen, are things going to change, what's going on. And so, when we look at this, we just kind of like try to take a step back and eliminate as much noise as possible, and then say, okay, based on what we're seeing, what can still do good? I mean, obviously, like, there's always that black swan event that nobody sees that comes in and just clobbers everybody. But if that doesn't happen, what should we be looking at? And that's kind of like the stance that we take when we're looking at things from like a big picture standpoint. And then, we just look for where is the wind blowing and which stocks are is the wind behind? Sorry.
We're looking at Palantir now, which is hitting new highs again today. 1 year, it's up almost 100. Well, let's say year to date. Year to date, it's up 152%. Tell me why this is a pick. You still think it has room to run?
Well, I mean, like it was up and then it was flat and then it's recently had a breakout. And when you think about what Palantir does, like, what do? Well, they provide analytics. And what do analytics do? Analytics are going to allow companies to be more efficient. So when you have a big corporation that maybe they're worried that like things might slow down next year, or there's all this uncertainty, they're going to look for efficiencies, right? And that's why you're starting to see buy-in of like AI technologies. That's also where you're going to take a look at, hey, what's working and what's not. Let's lean into the stuff that's working, and then let's like step back from the other stuff. So, and that's what Palantir does for corporations. And that's why, even though it's going straight up, or it feels like it's going straight up, that doesn't mean the move is over. You just got to make sure that you stay disciplined and have your exit strategies in place.
And then you have Constellation Energy and FICO. Tell us a little bit about those two. And what kind of gains do you think these could really have, maybe in percentage terms or over a period of time?
Well, CEG is an interesting play. We've seen utilities in general get beat up until this year, and then they've been just an amazing performer this year. And initially all the pundits will say, well, oh, it's because everyone is scared. But I would argue that maybe there's some fear there from like a risk-off trade. But we have to remember what's been going on this year. We've got technology, we've got artificial intelligence, we've got cryptocurrencies. And then stack on top of that, we've had these natural disasters. And so all of those things drive demand for energy. And so when it comes to energy in general, I think the sky's the limit. I mean, it's already up huge. It could easily be up another 30 to 40% over the next 6 to 9 months if the current trajectory continues. Now, of course, that's where kind of like the energy play comes in.
Mm-hmm, mm-hmm. And look, while energy's down, some of the energy stocks are actually trying to give it a go today. So we'll continue to follow that story. Energy demand seems to be questioned sometimes, China slowing and such. But, the big picture here on energy. Thank you for that. You have FICO and you also have Bitcoin. You have the ETF IBIT. Tell me a little bit more about that.
So FICO is an interesting one because it's kind of the opposite of what everybody would think. We keep looking at this data every single month, and we had a little bit of bad data for a minute, and now the data looks good again. Jobs are good, unemployment is good, like everything is good. We're going to head to that soft landing, right? But what nobody talks about is, well, why is it so good? Why does consumption look good? What's happening? And a lot of it, unfortunately, is debt driven. But if you're a company like FICO, you love the fact that things are debt driven because the companies are going to lean on you to determine whether or not the next consumer is a good risk. So that trade makes sense from the standpoint that the everyday person is still having like some struggles on a monthly basis. And so they're going to have to lean into credit. And if they're leaning into credit, FICO should benefit from that. And if you look at this year, you would say, yeah, you're absolutely right. Of course, on the other side of that coin, and we talk about Bitcoin. It's been quite the ride this year with the ETFs and everything coming through and coming to. The slope right now, when we look at the 3-week slope on the Bitcoin price, we see that is trending upward. Now, the volatility is king when it comes to Bitcoin. So if you have any reluctance to seeing your portfolio go up or down on a daily basis by 5 to 10%, don't buy Bitcoin. Like, you will not be able to handle it. It's going to drive you bananas. But that said, if we can stay above 55,000 on the price of Bitcoin, which is about 10 to 15% where it's below where it's at right now, closer to 10%, then we should see that basically rally. And everyone's calling for 100,000 on Bitcoin by the end of the year. I don't rule that out. And IBIT would be a great way to play that, but still be part of your overall strategy when it comes to like your asset allocation or your diversification. Because I do agree with your earlier guest. Right now, I think diversification wins over the next 2 to 3 years more than concentration does. And so you got to make sure you have multiple assets in that portfolio that all move up, but you want them to move up at different times.
And look, Standard Chartered came out with some really big numbers for Bitcoin, actually saying 200,000 by the end of next year, as well as Ethereum going to 7,000, but talked about if Trump were to be elected, these numbers could be even higher. But either way, either candidate, that this whole digital assets, the community of that, is probably a good play. Good to see you, Eddy Gifford. Thank you so much, CFP Wealth Advisor at Tactive.
Thank you.